Good evening, everyone, and welcome to the Daily Volatility Box Report for August 21st, 2019. We are TOSindicators.com, home of the Volatility Box. For today, we had volatility return back to the market. However, that was non-existent in any of our index futures, but rather, volatility came back in both the 30-year bonds, where we had 4 trade opportunities, and crude oil. However, the frustrating thing about today's trading activity was really in the bonds. And I think this is an important lesson on, once again, managing your emotions. And as Mark Douglas always said, thinking about each trade not as each trade, but rather as a trade in a series of trades. In the bonds, we had a total of 4 trades that set up. And out of those, 2 of the 4 were winners and 2 of the 4 were losers. The 2 that were winners did give us both targets, target 1 and target 2. However, the ones that were losers lost, obviously, on both contracts, and that led us to an overall P&L on the bonds of break even. So we actually gave up our gains from the beginning of the day. We started on a win, and then we ended up breaking even, which was frustrating, but again, important to remember and think of each trade as a sequence of trades, not the trade on its own. On the other hand, crude oil gave us 2 setups, both of which worked beautifully and both of which were before the FOMC announcement. We essentially used the aggressive volatility box for much of the day, and then an hour before the FOMC announcement, we sent out a note to all of our traders alerting them that we were planning to switch to the conservative volatility box for both the FOMC minutes, along with the remainder of the day to protect our gains. That did help to minimize the losses in the bonds, but it still gave us losses nonetheless. But crude oil, on the other hand, was a success, and that helped us to make today an overall winning day where we ended the day up $800 on 2 contracts. With that, let's dive into charts. We'll look at both the bonds and crude oil, and we'll take a look at the setups that occurred, what transpired, and what we learned from it. We'll start with crude oil first, and we'll approach this the way we approach all of our markets every day. We look at the first full hour of trading for that market, which in crude oil's case was 6 to 7 a.m. Pacific Standard Time, and we look to see whether or not we breached either side's entry lines on the aggressive volatility box, which is the one that's plotted right here. We see that in crude's case, we didn't, and that was our permission to essentially use the aggressive volatility box for the remainder of the day. We then began to scout out entries where we would breach either side of the entry line. That occurred right here, and this was our first entry in crude oil. Our stop was outside of the volatility box. We gave it 0.30 or 30 cents in crude rather, and our first target was once again the 30 cents. That was hit right here with this candle. If let's just zoom in just so you can see which candle I'm talking about. It's the one where we open and close at the same price. However, we did get our 30 fill. We actually went a little bit above the 30-cent target, and so that gave us T1 on crude oil on the first trade. The second contract was stopped out for a break even, and so that essentially took us into our next trade, where crude oil, once again, fell right into our volatility box entry lines. Our second entry took place right here, and this is actually the one time where our stop and having a slightly generous stop helped us. Our stop was once again a little bit wider. We had it at 25 ticks, which is essentially a normal stop for this kind of a range. And I think if many of you who remember our videos also remember the times where 25 ticks was just not enough and we got stopped out for a tick. Today, we were rewarded for following the same rules, following the same exact approach that we always do, and our 25 tick actually kept us in this trade, and we were able to get out for both a T1 and a T2. So for crude oil, we had 2 trades that set up, and both trades were winners for a net gain of $800. Now let's switch on over to the bonds and see what ensued there and how we essentially ended up breaking even. So once again, we'll approach this the way we approach all of our markets every day, where we look at the first full hour of trading with the aggressive volatility box, which is the one that's plotted, and we look to see whether or not we breached either side's entry lines, helping us determine if we should use the aggressive or the conservative volatility box for the day. In this case, you see that the bonds didn't breach either side, and that was our signal, or our okay rather, to use the aggressive volatility box up until the FOMC announcement. We then began looking for entries, and our first trade came right here, which was a short in the bonds. Our stop was right outside of the volatility box, where we gave it 5 ticks of room, And our target was once again, our first target was the 5 ticks, and we actually just had a puke down where we hit both T1 and T2 in the same go, and T2 was an additional 2 ticks. And so we had both targets hit, where T1 gave us 5 ticks on the bonds and T2 gave us 7 ticks on the bonds. Our second trade was triggered with this push down, where we had an opportunity to go long, and we had several opportunities to actually get inside of this trade once it triggered, and our stop was once again outside of the volatility box, the same exact stop since we're in the same hour using the same ranges. And so we had a tick 5 stops. Our stop was 5 ticks outside of our entry, and our first target was once again the 5 ticks, which was hit right here. Sorry, that's not true. Right here. And our second target, which was the target line, was hit right here for both a 5 and a 7 tick gain, respectively. So now, if we just take a step back and we go into the trading psychology that you must be feeling at this point, you've just had 2 trades back to back become winners in a span of less than an hour, and you're at least we were feeling pretty damn good about ourselves, right? We have 2 wins under our belt. Crude has been good to us. We're essentially recouping the silence or the lack of volatility from both Monday and Tuesday. And this is where it's important to control our emotions. Again, think about everything in terms of a sequence of trades. You have to take the trade opportunities if they fit your rules and present themselves to you, which is exactly what we did in the case of the bonds. But that, however, did not actually lead us to winning trades for the remaining 2 trades. For the first of the remaining 2 trades, we were still on the aggressive volatility box as we were well before the FOMC announcement. So this was at 10 o'clock where we had our entry trigger right here, where price action crossed into the volatility box entry lines, and we took our short right here. And our stop was once again outside of the volatility box clouds where we gave it 5 ticks of room. And our first target was once again the same 5 ticks. However, now if I actually click next so we can see what happened, we're maintaining our position. We're maintaining our position, thinking that there's essentially price is acting the way we think, where this is now turned into a resistance. And then we ended up just shooting through and stopping us out with the FOMC announcement. And so this trade was stopped out using the aggressive volatility box. And we had a valid entry given all of our signals. It depends on, I guess, your risk tolerance. If you had already switched on over to the conservative volatility box 2 hours before the FOMC announcement, then you would have avoided this loss. However, we, given at least the fact that we headed in with wins and the aggressive volatility box was looking good so far, we decided to take this trade, and this was a stop out. Excuse me. After this trade, that was our indication where now we're approaching FOMC minutes, and we needed to change to the conservative volatility box to account for the additional volatility that we expected as a result. So if we switch on over to the conservative box, and now we zoom out, we see that our next entry was a long on the bonds after the FOMC minutes, where we fell perfectly into our volatility box entry line, and this gave us actually plenty of opportunities to get long right off of this entry line. Our stop was once again the same outside of the volatility box. This time we gave it 7 ticks of room. And if we actually scroll through, let's see what happened. We ended up just puking through our stop. We didn't have any chance to salvage this trade. We were just stopped out before we could hit even our first target. And so both contracts here were a loser for -7. And so what we essentially had is we went +5 and +7 on our first trade with both the first and second targets. Then we did the same exact thing on our second trade where we went +5 and +7. And finally, on our last 2 trades, we ended up going -5 and -5 and -7 and -7, essentially canceling out all of the trades for the day. If you'll see, this actually cancels out evenly, and we were left with 0 total points in the bonds. Regardless of the end result of today, it's important to remember to stick to our rules, stick to our trading plan, and remember to think of everything in a sequence of trades. Not you, not I, or anyone for that matter had any idea what would happen next. And so, again, it's important to set your emotions aside and trade what you actually see. We had our setup in the bonds here, and we took it. And I think if you look back at all of our videos, you'll see that following our plan and following our rules has been a profitable strategy where it helps you become a disciplined trader, a consistently profitable trader, and one in which you're able to essentially just take the trades without overthinking or having analysis paralysis. So despite going 4 for 6 on our trades today, where we only went 66% in terms of our win rate, we were still able to end the day thanks to crude on a positive note, ending the day plus 800. Once again, we'll take a winning day over a losing day any day of the week. And while it did suck to give back much of our gains from the bonds, the earlier two trades in the bonds, that was okay considering that crude more than made up for it, and we still ended the day positive. We hope that helped, and we'll look forward to tomorrow's trading activity. And we hope that we get this volatility continues and we get more setups, more trades, and hopefully the indices start getting involved here with the volatility, so we can get back to trading what we like trading best, which are the index markets. With that, we hope you have a great night, and we look forward to seeing you tomorrow.